Hello investors and future investors, welcome to the channel. For today's video, I'm going to be showing you how to close the PMCC option strategy, better known as the poor man's covered call. Now, this option strategy allows you to maximize your returns. However, it is a more advanced option strategy. But if you are willing to learn, then I'm definitely willing to teach you. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be showing you how to close your poor man's covered call. I'm quite sure you guys have seen several videos of how to implement this option strategy, but this one is going to show you how to close it. Now, before we go ahead and demonstrate this option strategy, there is always two things that I require from my viewers and my subscribers. The first thing is going to be always make sure you do your own due diligence before investing. The next thing is going to be always make sure to have an exit strategy before entering any options trade. And it so happens to be that this video is going to be about one of those exit strategies. Now, you guys know how we do on this channel. Let's go ahead and get down and dirty with options. Now, this is the format that this video is going to take. I'm first going to show you the leaps option. I'm going to explain to you how to do the PMCC in detail, and then I'm going to go ahead and show you how to close both legs of the PMCC. If that sounds like fun, then let's go ahead. So currently, I'll be using PMCC on ARM PLC, and as you can see here, I have the 105 call. Let's go down so we could see how it's doing so far. So I have a current expiration date of January 16, 2026. Now, I did pay to get into this option strategy, and I paid $20.25 or $2,025. Each option contract is multiplied by 100 shares. Currently, this option contract is up to 33.35. So overall, I'm up $1,310 or representative or 64% up. Now, very important to note, the expiration date of this leaps option is January 16th. I do not have to close this option strategy. However, I always have an exit strategy before I enter any options trade. Now, I'm going to go ahead and show you guys how to implement the PMCC option strategies. For those of you that are seasoned to the channel and know how to do this option strategy, bear with me. This is going to be really quickly. Now, for those of you that are new to the channel, this is what you do. You're going to go ahead to view all options, and that's going to open up your option chain. Now you're going to go ahead, you're going to go to buy and call, and then you're going to go ahead and select a long call or a far out expiration date. So we're just going to be using the March 20th, 2026 expiration date, just as an example, which gives us around 319 days to expiration. Now we're going to go down and we're going to choose our strike price. If I were to pick up a leaps option on this stock right now, today, as of making this video, I would definitely use the 110 strike price. Now, with the 110 strike price, you're going to have to pay for this because this is a buy option strategy. The amount you're going to have to pay is going to be $34.40, or it's going to be $3,440. Once again, you multiply the price per contract by 100 shares, and that's going to give you the overall cost of the stock. Now, what this does is that this allows you to control 100 shares of the stock. And once you're able to control 100 shares of the stock, then you could go ahead and do the second part of the PMCC, which is known as the covered call strategy. And to do that, you're now going to go ahead to sell. You're going to go ahead to call. And now you're going to choose a further in expiration date. Feel free to choose any expiration date that suits your fancy. Just for the purposes of this video, I'm just going to go with May 16th, which gives us 11 days to expiration. Now for this one, you should always choose your strike price above the share price. And I would be going with probably the $140 strike price right here. Now that's going to be paying me. The amount is going to be paying me is going to be $1.71 or $171. So with the PMCC, you just went ahead and you bought a call, which you paid for. Now you're going to use the controlling interest of that long call, and now you could be doing covered calls on a weekly, bi-weekly, or a monthly basis, and that's what allows you to generate consistent income. Now, how do we go ahead and close a PMCC? Well, it's quite simple. I'm going to start off with the leaps part of the PMCC. So let's go back to my original one. Let's go to buy, call, and the date was January 16th, 2026. Let's go ahead and find that once again. Okay, so here it is right here at the $105 strike price right here. So in order for us to close the PMCC, what we're going to do now, this was a buy call initially. So now we have to do the opposite of a buy call, which is going to be a sell call. So let's go ahead and we're going to select that. Now we're going to go ahead and select it. And now that we're selling it, we're going to be getting money. The money we're going to be getting is going to be $3,250. Let's go ahead and click into it. Now, this is part one of the PMCC. I just went ahead and closed the leaps option. Now I'm going to show you how to go ahead and close the covered call aspect of this option strategy. So now we're going to go to buy. But before we do that, remember the covered call was sell and call. So in order to close it out, you're going to have to do the opposite. So the opposite for this one now is going to be buy and call. And now we're going to go ahead and look for our original covered call, which was the 140, as you can see here. Now, when we did the covered call, we sold a call and we received income. Now to close it, we're doing the opposite. And because we're doing the opposite, we're going to have to pay. The amount we're going to have to pay is going to be $18.50 or $1,850. So we're going to go ahead, we're going to select that one now. And then this is going to be your result right here. You're going to hit continue. Good. Now, in order for you to close your PMCC, all you need to do is do the opposite of what you did to get into the contract. For your leaps option, you need to go ahead and sell your leaps option. For your covered call aspect, you need to go ahead and buy back your call. In my case, I'm going to be getting some additional income, and that's going to net me a credit of $1,500 just to run it off. So that is how you go ahead and you close the PMCC option strategy. Now, if you guys are interested in this and other income generating option strategies, I do offer one-on-one coaching. That link is going to be in the description below. I'm also going to post it in the comments as well. Now, like I mentioned, the PMCC is not only a very good option strategy in order for you to maximize your portfolio returns, it's also a very good option strategy, especially if you're trading with a small account. The PMCC allows you to control 100 shares of a stock that you otherwise may not be able to afford if you had to buy the stock outright. Now, I do show you everything where you make income with these option strategies, but there's a lot more that goes into it than just these 8-minute videos. So remember, if you need any help with this, just let me know. Now, those of you that made it to the end of this video, go ahead, like the video, subscribe to the channel. Make sure you hit the notification bell to get an alert when I post a video. But most importantly, if there's anyone out there you know struggling to grow a small account portfolio, then the only thing to do is to go ahead and share this video with them. Let's help as many as we can. And until the next video, keep pushing your investments.